Hello guys, welcome to a Trading Parrot and to another episode of General Markets Analysis. Russell is putting a new all-time high together with gold. We'll look into that and to some fears that could spread in the market. This is how the market closed yesterday. We can see NVDA correcting 4.4% together with AVGO 3.5%. The rest of the sectors have some combined but more lean in towards the green. Let's start with some tweets. The US job market is in a bad place. 63% of Americans expect a higher unemployment rate in the next 12 months, reaching crisis levels. Let's remember that we are within a government shutdown and that the official information is suppressed at the moment, but some alternative sources, together with the opinion of people, are kind of spreading around still the fear. 142,000 jobs lost, excluding healthcare, over the last 4 months. We can see here in the past how job market crisis peak can be associated with great financial crisis, recession in 2001 and in the early 90s. This is one of the things that can force the hand of the Fed towards cutting rates, quantitative easing to support the crisis, which tends to be perceived by half of the people as an opportunity for additional upside in assets. By the other half of the people think that if we enter into such situation, we risk entering into an actual recession with big downside on assets, which to me kind of explain these two separate assets putting new all-time highs at the same time. We got the Russell now breaking against this resistance of 2.4K for the first time since 2021. And it's doing that in the context of a revenge rally on the weekly. So whether Russell is going to be able really to reclaim the green line, which is actually the lowest possibility at the moment, is more likely that we see a rejection from 66 and then downside on the momentum. But we'll see if this push in here is actually going to be a breakout from a bearish pattern, if we can hold the 2.5K, or if it's just going to turn into a liquidity hand with deeper correction into the 2.3, where we are being weighted by the 21 weekly moving average. And at the same time, we are getting gold breaking above 4.2K for the first time in history. Again, against some patterns that were saying that this was low likely, gold is pretty much defying all those forces. In my opinion, either gold or the Russell, one of them is going to respect the rules and break down. So far, we don't have any indication of which one is going to stop. Something to take note on is that Russell is risk on. It's much more aggressive than thinking gold, which is supposed to be the safe haven. And I left in here so you can observe the correlation that it's been having against Ethereum. I mentioned this in a few videos ago, and the similarities are very clear to me. Let's put this on a line like that so you can see how similar they behave. Some differences, of course. Breaking the 4K for Ethereum was like a triple top, whereas on the Russell that was in an uptrend. This correction is very similar to this one in here, and similarities all the way, not just on proportions, but also in terms of timing. It will never be precisely the same, but I think this is already impressive. And if the Russell was able to hold the 2.5K, I will be very inclined to thinking that Ethereum can also do that from the highs of 4K into a new all-time high potentially. Now, if Russell sees a correction into the 21 weekly or deeper, of course Ethereum, the most likely scenario is that it's going to follow through with that as well. Let's see what other people are saying about the Russell all-time high. Last time I posted this, Russell was hitting all-time highs, trying to break out. It ended up rejecting on the first try, which is normal. Now a couple of 2-week candles later, trying to break out again, printing a new all-time high, all looking beautifully staged. This chart will single-handedly resuscitate your wallet of crap, worthless shitcoins. Everybody's on the look for the Russell to produce an actual real breakout above the 2.4, 2.5K. And we're talking about the horizontal breakout into all-time highs, because earlier we already have 1.4 from 2.5. And this could mean that if we see a rejection from here, thanks to the weekly not being able to reclaim that, a move back down into 2.5, into the 21 weekly or 2.2 is definitely possible. BlackRock is eating the world. The world's largest asset manager recorded net inflows of $205 billion in Q3 in 2025 as the company expanded its footprint in private credit and alternative assets. BlackRock's total asset under management hit a record of $13.5 trillion as market surged. And now this includes also Bitcoin. If you think that the AI adoption has been slow, think twice. Compare the ChatGPT adoption into number of users versus the internet. The internet took years, 13 years to be more precise, to more or less what ChatGPT has done in just 3 years. The news is that ChatGPT has that thing that it self-builds now because engineers are involved in the development, but an incrementally more exposed development is delegated now to the AI itself, to the previous generation to produce the new generation, which is definitely gonna make all this AI thing grow faster than exponential. The only thing that I can think of that could potentially slow down somehow the advance of this technology is anything to do with energy. Yes, AI consumes a heck of a lot of energy, and there is no AI if we cannot expand the capacity to power all of this demand. Nuclear energy and all of that, I believe, is going to become a must to fill all this power-hungry demand. How are we going to generate all this energy to sustain the AI bubble that we are thinking of? The US Department of Energy says that the US data centers will use 325,000 to 580,000 gigawatts of power around 2028. That's equivalent to the power used by 40 million homes, all on just data centers. Currently, nuclear power is viewed as the only solution to the impending power shortage. Of course, this has the side effect that, well, to keep our house warm or to use energy for anything else is definitely going to become a lot more expensive. We need 73 plants new to power that amount of demand. But since 1995, only 2 nuclear reactors have been added, and it takes over 10 years. So that divergence between what is being consumed versus what is being produced eventually is going to cross. And if there's no breakthrough in when it comes to tech for producing energy, so the only way to solve this is to achieve AGI before that happens, so AGI can find a way to power himself. Anyways, not a lot of TA going on, but definitely fundamentals, we could say. And yes, yesterday the Fed's Powell may be approaching end of balance sheet contraction. We talk about that in the Bitcoin video. It affects all the markets. QT could end soon as reserves tighten, balance sheet more than rate cuts. Job market is cooling, low hiring, low firing. Data blackout forces the Fed to rely on private indicators. That's because of, obviously, the shutdown. The policy stays meeting by meeting, so full of surprises incoming when it comes to how much to cut, whether to cut or not. And that's what I mean by the expectation of people saying QT came to an end. And they state that on crypto Twitter. I think is not really that black and white. It's a bit of a gray area. It's positive to see a small addition to the balance sheet. It's positive to see that they're willing to do that. But we still don't have anything to quantify against when it comes to quantitative easing to state that is really going to be substantial. Policy stays data-driven, but data is being kept under 3 keys. And deep buyers are taking on more leverage. The 2x leverage NVDA ETF NVDU posted a record of 132 million in net inflows last week. This is 32% above the previous high of 100 million set in January. It also ends a 4-week streak of net outflows. And that is excluding AMD, which also took a big hit in leverage with a 35% up The takeaway is that investors are still betting big on tech stocks. And prepare for volatile Q3 earnings season. The average implied earnings they move for the S&P 500 stocks based on options pricing is 4.7%, the second highest since 2022 bear market. Consumer discretionary stocks are expected to experience the most volatility at 6.2%. This is followed by information technology and communication services at 5.9 and 5.8. We are preparing for big earnings days stocks moves. Before we go into specific stocks review, we can see that the most impactful things that are moving at the moment in the macro start with the oil inflation impulse. The oil slid to 5 months lows on supply surplus and trade tension worries that lowers near-term inflation impulse. That is the highest impactful thing for Bitcoin. It's got a 6 out of 10, so it's slightly bullish because it could ease the path to rate cuts. Fed policy expectations that we got yesterday, a little bit more dovish guidance and elevated cut odds. China continues with deflation, CPI at 0.3, PPI at 2.3 year on year. The core ticks at 1%. That's a medium influence and is 6 out of 10 for Bitcoin as well. Weak demand equals global disinflation tailwind, bullish rates, but growth fears can sap risk appetite. Net slightly bullish. Let's have a quick look at some other indices. Looking at the dollar, after we hit our target, we were slightly above 50. Now we came back a little bit on rejection from that level of resistance. That was my conservative target, and we already hit that 99.5. Now we are coming back down in what we could call this week as the retest of the breakout. If we go beyond 98.8, lower than that, we're kind of entering in the area of the fake out. That will mean that this move up with a target of $101 could be in risk. RSI still not putting any low. We could come back in here to test support before we attempt to actually break the resistance of 50. VIX, after the expansion that we were seeing yesterday into 23 on the volatility S&P 500, on the RSI that looks like a retest of additional expansion. We have achieved already a 56, getting closer to our target of 58.84 on the RSI. Still, we came very close there at 24, but we need to really break above 24.25 on the VIX to really start calling for any substantial expansion that could bring some more turmoil on Nasdaq and S&P and other assets. Nasdaq, I remind you that we are facing this liquidity that ends at 635. Pretty attractive to just let it go. With this candle down, it just came to test support, and potentially we could see in the next days or weeks that this liquidity is actually gone. On the S&P, we are opening at 666, slightly higher than the 662, so it looks like a positive day for the S&P is incoming. And the Nikkei continues to accelerate right after this candle pointing up. It seems to be again on the move, still defended by this line of upside. When it comes to the stocks, nothing really new. Google is still breaking down on the weekly. Apple far from support. NVDA having a little bit of a struggle in here, although pre-market is 184 today. So we'll see if we will continue to build a channel to the downside. Potentially this could turn into our channel down. Too early to say really, but I'm gonna leave it there to see if we exit from that and we resume to the upside. At the moment, the highest likelihood is to put a new low at 56, possibly go into 166 and then complete a double top around this area. AMD still defending the $200 new support. Amazon putting new lows on the weekly. Tesla and many others currently battling with bearish divergences and double tops. MicroStrategy in the area of the breakdown at the moment, consolidating right here below support. Thanks so much for watching. I'll see you in the next one. Bye bye.